Hey traders, this is Ron Haidt at Market Tamer. Happy Monday. Hope your week is off to a great start. As always, everything in this presentation is for educational purposes only. We're going to kick off here with the Qs. They were down a lousy 40 cents, but they're still above their 50-day. If we look at the spiders, they were up a whopping 15 cents, still above their 50-day. Target are the all-time highs on the SPY, going back to the 26th of July. All right, how about Google? So the state attorney generals, whole bunch of them, went to the steps of the Supreme Court. They're going to launch their antitrust case, etc. Google printed what we would call a bit of a high wave doji, where it traded all the way up to 1220 and then as low as 1193, so about a 27-point range. It's still sort of caught in this sideways action here. Overall, the daily chart of Google is still bullish because we're above the 50-day and we're above the 20-day. If there would be some bearish movement here, get below the 20-day, then you would be getting below the 50-day. And if that happens, at that stage, the charts would turn technically bearish. But as long as Google stays above there, the bulls would get the edge. So even with this bad news, basically, pay some fines, nobody ever goes to jail, blah, 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 business as usual. We'll see what happens. But if I was a shareholder of Google, there's nothing wrong with the chart just yet, but if I had too much of my money in Google, for example, I might want to consider some long-term protective puts, maybe near the money, maybe something out, maybe even a leap option at this stage. Just food for thought, but even after the big news event, the stock didn't do anything. All right, I had some questions about downtrending stocks and retail stocks. We got a bunch of different stocks here to cover. Let's first start with AYX. And one of the questions was, what does a change in trend look like? So I was looking around for stocks that went down a lot today, and AYX met all the criteria, it checked all those boxes. Look at that big spike in volume. It doesn't matter that it was 5 million shares. The number is sort of irrelevant. Look how high that bar is over the past year. This stock has gone from 50, it's almost tripled, and in one day, pretty much 2 days, just on Friday, it was as high as 147. Now it's at 120. When you see a crash like this through the 20-day, through the 50-day, something where these moving averages just keep going up, you finish near the lows of the day and you get a huge spike in volume, this pretty much runs all the stops. This thing is no longer bullish on the daily chart. One big day did it. The trend is broken. Sure, there might be a bounce potentially, maybe not. The news is irrelevant at this stage. It's look at the volume. They were selling this thing 9 ways to Sunday. If this big move would have happened on really, really light volume, you could sort of say, well, maybe it was just, I don't know, computerized trading or something gone awry. There was no market in it today, but that's not the case. So this is definitely the beginnings of a trend change. And the daily chart here is turned bearish. If we go to OKTA, this is another one, but this one's interesting because after having a nice run, and you can see how the 50-day acted really nice here as support, we started to get below it here. Okay, but it was just 1 day. But notice the high, it's a lower high. Then we come right back down, we test this 125, 4 out of 5 days. We come up and really can't get much higher, and we don't go back to new highs. Then we start rolling over. Look at these probes. This is a high wave doji here, but you see the probe below, another one below, and then the failed back test at moving averages. You guys want to write this down, circle it, take a picture. This is classic. This happens so many times, where the stock probes, it's like putting your foot in the water on the dock to see if there's any of these sharks in the water, right? A dip, and then the complete fall off a cliff. The volume started picking up already. Even though there was buying volume that would have brought the stock back up, you can see the volume started to pick up, the probing started, and actually Friday it even put new closing lows in, and today the bottom just fell out. The target for a stock like this, the last consolidation zone is in the mid-80s. So that's still arguably $15, $25 away. How about TWLO? Maybe a more common stock. If you look at TWLO, the 50-day institutional moving average is in orange. We pretty much stay above it, but look what happens here if I zoom in. Here we get below it, but then we shoot to new highs. Here we get below it, but we really don't go any lower, right? It was sort of like a shakeout, fake out. 1 day down, go back up to new highs. Then we ride it, we try to go back up when we can't. That's not a problem. But here's the thing, once we break it, remember it was pretty much 1, maybe 2 days at the most, and the lows held every time. Here, 1 day, 2 days, 3rd day you go lower, okay, then the earnings, but look at the failed rally, up into the 20-day, we come back down, up into the 20-day, no new highs. This already was the warning sign. So if I was trading Twilio and I would see this kind of action, I'd be very concerned. First of all, I would have had a protected put for earnings, most likely, right? But then you go sideways and you can't get back above any significant moving averages or previous highs. You get above the 20-day, but you can't get above the previous high where the gap down was. You couldn't get above the 50-day. Friday, bad day, volume starts to pick up, and then today the bottom falls out. So this one, you could almost say, you could almost look into the crystal ball and say, oh, this is not looking good. And notice where we stopped on those previous lows. Once we cut through that today, the bottom fell out. The next target, the next major support is 75. There is a big box here between 100 and 75, back and forth. But this thing is also flashing all kinds of sell signals now for almost a month and a half. Here is RGEN, Repligen, another one. Nice move up, right? And then today it's violated. So if I would come home from work and see my stock down at 82, completely blowing out these moving averages, something it hasn't done since May, this also would be considered a stop out or a change in trend. I would no longer be bullish. I'd have to be bearish or maybe consider exiting position. Again, this is always from an educational perspective. It's not advice to buy or sell. Practice your paper trading so you can see what how stops play out, what bullish and bearish is. But hopefully AYX, OKTA, TWLO, and RGEN answers those questions. These are stocks that were in uptrends, and now you can see what reversals look like. KHC is one we'll be keeping an eye on. Ever since the big down move, this is one of Buffett's big holdings. There's another down move in August. We are now into the app. So the big target, $30 or so, the 50 days right around 28.50. The volume isn't huge, but it's becoming consecutive and decent. So it's not big. We're not getting big spikes, but decent. So those are upside targets. This is starting to look more and more bullish as the days pass. If it gets above the 50-day, that'll be even a bigger deal. And then I had questions on retailers. I told you guys I was going to watch these from a seasonality perspective, purely by the data. They don't have strong seasonal bias this time of year. But these guys have been taken out behind the woodshed so often that just share from either evaluation or you could say maybe the worst is finally behind us as we come into the holiday season. We're going to start to see a change. Well, what I was looking for, and I shared with you guys a couple videos ago, let me zoom out again. This is Kohl's. This was the big sell-off from 75 just in April, 75 in April. We come down to 45 in July, the end of June, beginning of July. Then we get a rally, right? So I highlighted that for you guys. But I did note, if I zoom in here, there was no big volume, but we did break out. Then we get back below the red line. That's a mini stop out. And then we lose the 50-day in orange here on August 14th. The next day, August 15th, we actually violate the lows. This is a bad sign when volume picks up and you break previous lows because this was a rounded bottom, and I love rounded bottoms. At this point, stops are being run, and frankly, I'm surprised the volume isn't even bigger. But yeah, I think it's showing us that the selling is pretty much dried up at this stage unless more bad news comes out. If I take you to a 2-year chart of Kohl's, once we hit this level, 45 bucks back on the 14th, 15th of August, the next stop was technically in the upper 30s. There was over a 10, maybe 15% plunge till support. But here's the point. If I zoom in a little closer, when you get that plunge and you take out previous lows and there's no follow through, which there pretty much wasn't, one little day and that was it. And then those lows hold, and now we're getting the thrust higher. This tells me that, you know what, why there's no guarantees, it looks like maybe the worst for now is past this stock. I'm not saying it's going to go up and fill a gap and double its value, but from a bearish perspective, today sealed the deal. This was your warning sign. No follow through, sideways, and then you start creeping up. Today was the confirmation. This is now looking bullish on the daily chart. Bears, if you're still short Kohl's or bearish on Kohl's, you might want to keep a close eye on this. And there's other retailers that are doing the same. So here's Macy's 2-year chart. Again, this stock last holiday season, almost a year ago, was 35. It's now 15. Actually, it was in the 14s just 2 weeks ago. Let's go ahead and zoom in. So we get some heavy selling pressure, and we come down here on the 28th. Get a little bit of a rally, and then it goes right back down. Oh, this isn't good. First of all, there's no big volume, and we immediately reverse. This too looks like it might be one of those bottoming type, hey, we couldn't sink it even lower, now we're pushing higher. It closed, the 20 days, what, 16.17, we closed at 0.18. We're talking about actually less than a penny here. That's not enough for a true trend change. I would hope we get a full penny, a couple pennies up. But here too, when just looking at Macy's itself, maybe doesn't look like a major turn, but we're seeing it in other retailers. Now Macy's is coming along for the ride. Maybe this is going to be the weaker of the bunch, but once it gets above the red line, the gap fill is going to be the target, which interestingly, the 50-day is going to be coming in there too, right around 19 bucks. How about Nordstrom's? This is one we have been watching. Nordstrom's, last November, 65. We're now at 25. A month ago, well, if we zoom in here, what do we see? Big move in volume. And I highlighted this for you back on 8/22, right? We closed above the 50-day. I said, ideally, I'd love to see it get above these highs because if it gets above the highs right here and here, we're starting to set truly higher highs. Okay, so this was the first move, right? Then we went right back down and gave some of that back. We dipped below the 20-day. That's enough to stop people out again. And what happens? We roll right back up, and then we popped up on Thursday of last week, took out the previous high. Actually, Thursday, end of the day, or Friday, could have been a long bullish trade idea, for example. Of course, paper trading account, and then today, pop 5%. And we closed above the previous high. And volume, while it's not huge, it's still above the selling volume, which is something that's what you like to see. Over the past couple of days, if there was selling, are you bigger than that? The answer is yes. So right now, this big volume reversal is holding. We're pushing up. Nordstrom's target now is going to be the gap fill up around maybe 36 or so, 37, still over 10% higher, and then back up to all this ledge support around 42.50. What was once support for many months, and then it just fell down. All right, how about TLRD? We haven't looked at this one maybe ever in a long time. This is Taylor Brands. It's Men's Warehouse, Joshua A. Bank, etc. Okay, June a year ago, 32.50. It's at 5. Now, that doesn't mean it's ever going to get back there. The fundamentals could be crappy, and we're not even talking about fundamentals, but coming into the holiday season, look what's happening. Here were some lows in June and July. We break them, and then we start getting this rounded bottom. But what I love about this is the 20 and 50-day are about to cross. As that 20-day comes up through the 50-day, that is a technical buy signal, purely using technical analysis. If we look at the red bars, okay, big red bars, but the price is not falling apart, then we look at the black bars. What's happening? We're pushing higher. Big red bars, but we're still pushing higher. The bulls are winning is what is let me say that again. The bulls are winning, that's what it's telling us. And we closed over some of these highs or right at these highs. Next target, technically, we could argue is a gap fill at 11. It's almost a double. I'm not saying it's going to happen, but if I was short this stock, I can't be short the stock anymore because we're having this change in trend. The stock may go sideways for the next million years, but from a bullish bearish perspective, the bears have lost their edge. We're above moving averages, and the buying volume is coming in. How about other stocks that are doing turnarounds? TUP, Tupperware, check this out. The 50-day is at 1541. We close at 1531. 10 more cents, gap fill the target at 1750. Then just go up to previous highs, maybe about 20, maybe about 2250. Then up here. This is the beginning of a trend change, a bigger volume increase. Not huge, but bigger. Here is TEN, which is Tenneco. This stock is up in the 60s. Now we're taking out previous highs. Target, right where the gap down occurred, gosh, that's 16, 17 bucks. That's huge. And then a gap fill. How about MDR? Some of the oil stocks are moving. This is McDermott. Energy oil, getting above the 20-day today target. The 50-day comes right into where the gap down was, around 7. And that's huge. That's almost 20% higher than the gap fill. How about Range Resources, RRC? Stock was 18 bucks in November. It's gone down again, possibly for all good reason, but we're starting to see big black bars coming in here. There are red bars, but we've seen some blacks, and today we closed near the highs of the day, but we need to get above the 50-day, in my opinion. That's still 10% higher. I get it. But we get above the 50-day, that's something that hasn't happened until we lost this ledge support around 10 bucks and the stock dropped 70%. Above the 50-day, that's a trend change. How about Apache? APA was up 5% today. We saw some big volume in the middle of August around the 13th. And then what happened? It dipped below, hammer, but it was lighter volume, and now we're above the 50-day target, somewhere back up in the upper 20s. And XOP, which is the oil and gas ETF, it was up 5%. That's big for an ETF. Again, if it gets above the 50-day, something it hasn't been able to do since back in April, May, then you just go back to previous highs, probably something around 27 or so. This is a longer video, but a lot of stocks to watch. We looked at stocks that are rolling over and what that looks like and how trend changes are classified, how to identify them, and then a whole bunch of stocks that are starting to reverse off these long-term lows. So keep an eye on oil and energy and retail. They have not been in favor for a while, and we're starting to see some turn. So I hope this helps. Hope you find it helpful. Again, paper trading is always free and there's no risk. Wish you guys all the best. I'll be back with you tomorrow. Take good care.